You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Wednesday, July 12th. We've got a great show for you today. We're going to do a quick portfolio update to show you how our portfolio is doing, the performance on the stocks we invest for our kids. We're going to be talking about where you can get some hands-on with the Xbox One X. We got a long shot stock in NOVOCURE, indie game service coming out that's like Netflix. Fire Pro Wrestling could be coming out for the Nintendo Switch. Some rural internet news and news on the Overwatch League. So we've got a ton of stuff coming up for you if you're watching live. Each of those is going to be a story posted on YouTube in a form of a recap. So let's jump right in. NOVOCURE is our latest in the long shot high risk, high reward investments that we're looking at this week. If you have any of them, send me a message or put a comment in the video. We're going to be featuring these all this week. This one is an interesting one. It is not in the field that I normally play around in, which is entertainment, video games, movies, technology to some degree. But it is a good example of a high risk, high reward stock. They work on cancer cures, pharmaceutical, bio companies. Typically, they have some long shots on them. High risk, high rewards. They fall by the wayside, and you can make a ton of money off them. So I was looking into this one a good bit last night. They did pop recently, so you may have missed off on a good bump. I think it was back in April is when they had their big bump, and they've had quite the run up, more than doubling their shares, as you can see, since it was April when they had their run up there. So may have missed getting in on this one. The company. When you look at some of these pharmaceutical companies, the problem is to learn about and when they're working on cures for different diseases or companies that are specific on that. Some of the things is it's hard to get what trials they have that they're working on and everything like that. It can be a pain to see everything that they're working on and what they're doing. One thing I found on their investor relations is it's pretty straightforward with them, what they're working on, what's in their pipeline. It's all out there. So I like that about them is it's pretty easy to follow. And you want that when you're looking at one of these companies, because that's when you're going to have your pops, is good news and bad news coming back from those different trials. Now, their latest, one of their annual reports that I was looking through, there's a few red flags in this. Now, it is full, and this is going to be kind of annoying as I scroll through the whole thing. I'm going to scroll through it, try and get through it quickly. They have a lot about the people that are working there, what they're working on, and what they're doing. So there's lots of stuff on that, which is good, and it's cool, and you can follow through with what they're working on, what experience they have, who's working on it, what the treatments are doing. So tons of information on that. To me, though, it's a little bit of a red flag when it's heavily loaded on that type of stuff and not on the financials when you're looking at stocks. But that's just my gut interpretation. But if you look at this is a good example of you have to be careful of what data you look at. And when you're getting it from the company itself, a lot of times they'll focus on things like this, where they've got the 151% revenue growth, and you see this chart with this huge growth that they have, upwards of $30 million. So when you see quick snippets and press releases, you look at that and you say, well, that's where I want to get in on. You gotta dig a little bit deeper. And I'm just using this as an example. I'm not saying that the company does this, because they're pretty straightforward again when they have their losses. But so they're getting up to 30 million in sales, but their losses have grown over the year from 80 million, 111 to 131 million. So the company is eating losses the last 3 years and overall. So be aware of that when you're looking at that, or whenever you see a press release. It's easy to say you're up 151%, and you go, holy shit, that's good. Make sure you put your data into context when you're looking at that. So I want to pull up their statistics here on this company, and the thing I don't like about them, they got 189 million in cash. They bleed out losses of 100 million a year. You can see there also shows up there in their free cash flow of negative 74 million. So they don't have a ton of money out there. They may have to raise more money by issuing stock, et cetera, et cetera. That could impact your stock price. But the good things with these, different pharmaceutical or companies that work on cures. I call them a pharmaceutical, but they have weird electronic treatments and stuff like that. They're not your typical company, not your typical pharmaceutical company or bioscience company, biotech. So now the good news, and why I like this as a good speculative long shot stock, and that's what we're looking for this week. Look back to when they popped in April. I'll put a link to this article from the Motley Fool. And they talk about that April spike that I showed you that I was talking about there. When these companies get any kind of whisperings of good news from the trials that they have, huge uptick in their stock there. So in the short term, you can see these huge spikes when you're dealing with these type of companies, or if they do come with some sort of cure for a cancer or something that will extend your life drastically for a cancer, those are huge breakthroughs, and that's what they're actively working on. So you can see the upside on these is extremely high. You just want to really pay close attention to their financial statements, see how much money they have, see how much they're bleeding out. Good that their revenue is coming up. Hopefully they can stop the bleeding. They might have to do a little downsizing or focus on only a few more projects, but it's easy for them to raise more money, especially with promising technology and things like that. So I like it as a long shot speculative pick stock. These are the type of ones that are cool. As always, there's lots of risk involved when you're owning the stocks, so don't invest money, especially on these long shots that you can't afford to lose. No dividends, so I won't be investing in it, but it'd be interesting to see how it goes up, definitely. And in the comments there, went down to how the phases went. Yeah, a lot of their stocks, they go up and down with that. Exactly. It's so if you can stomach some big swings and you see some good opportunity with them there, they're great long term or long shot stocks. And you should, to me, if you do have the free money, those are good ones to have out there in your portfolio. We're going to wrap it up for today. We are live Monday through Friday, 1:30 Eastern, 12:30 Central. Leave us some feedback. Interested to know what your thoughts on the show. We always want to make it better, grow the channel, get more people involved in investing, especially those that are gamers, creators, people like that really ignore the stock market and think it's kind of a evil thing. It's not. You can make some money off it. You can support your channel with it. I tell you what, GameStop's dividends have been funding all of our stock purchases on this channel for the kids' college fund for some time now. So get involved in it. Give us a thumbs up if you enjoyed the video, and we will see you tomorrow. Subscribe if you haven't already so you get the latest investing news for gamers. Thanks for watching.